Every year, millions of Americans overpay the IRS simply because they don't know which deductions, credits, and strategies they're legally entitled to use. This guide breaks down how you can structure your finances so that every dollar works in your favor. Nothing here involves loopholes or risky tricks, just official, IRS-approved methods the wealthy quietly use every tax season. 1. The foundation. Know your tax bracket. Start by understanding where you stand. In 2025, federal income tax brackets range from 10% to 37%. The bracket isn't a flat rate, it's marginal. That means the last portion of your income is taxed at the higher rate, not the entire amount. Why this matters? Every legal deduction you claim lowers your taxable income. Even a $2,000 deduction can drop part of your income into a lower bracket, reducing what you owe overall. Keep a simple spreadsheet of your W-2 income, freelance income, and investment gains. Use a free IRS tax estimator or tools like TurboTax's preview calculator before the year ends. Most people only check this at filing time, when it's too late to optimize. 2. Maximize retirement accounts. If you're employed, the easiest legal way to reduce taxes is to contribute to your retirement plan. 401k. You can contribute up to $23,000 in 2025-30. 500 if you're over 50. Contributions are pre-tax, so every dollar reduces your taxable income immediately. Traditional IRA, up to $7,000 if 50 or older. Deductible if your income is below the IRS phase-out limits. Each dollar invested in these accounts not only grows tax deferred, but also cuts your tax bill this year. If you're self-employed, open a solo 401k or SEP IRA. Both give massive deduction limits tied to your business income. Think of retirement contributions as buying yourself a legal tax discount every year. 3. Use health accounts the smart way. Healthcare is expensive, but the IRS gives you special accounts to ease that burden while cutting taxes. SHA Health Savings Account. If you have a high-deductible health plan, you can contribute $4,300 individually or $8,600 for families in 2025. These contributions are triple tax advantage. 1. Tax deductible when you contribute. 2. Grow tax-free. 3. Withdraw tax-free for qualified medical expenses. FA Flexible Spending Account, offered through many employers, lets you set aside up to $3,200 pre-tax for healthcare costs. The catch: use it by year-end or lose it. Though some plans allow small rollovers, combine in SHA and 401k, and you already shelter tens of thousands of dollars from taxation. 4. The power of itemizing. Standard deduction in 2025 is $14,850 single and $29,700 married. Many people stop there, but if your deductible expenses exceed that, itemizing can save you thousands. Common deductions include mortgage interest, state and local taxes, SALT up to $10,000, charitable donations with receipts, medical expenses exceeding 7.5% of AGI, and disaster losses in federally declared zones. Example: if your mortgage interest is $9,000 and SALT tax $8,000, you already exceed the standard deduction. Itemizing lets you subtract the entire $17,000 instead of $14,850, lowering taxable income by $2,150. Multiply that by a 24% bracket equals $516 cash saved legally. Keep digital copies of every deductible expense receipts photographed and stored in Google Drive or QuickBooks Self-Employed, so you never scramble at tax time. 5. Turn everyday spending into deductions. If you run a side hustle or small business, you have access to deductions employees don't. Legitimate business expenses include home office portion of rent, utilities, internet, business software subscriptions, Canva, Zoom, Notion, marketing or ad spend, professional services like mileage for business trips, IRS rate 67 per mile. Keep a separate business checking account and pay all work expenses from there. The IRS looks for clean records. This one move prevents issues during audits. 6. The side hustle advantage. Even if you make only $500 a month from freelance work, that small business status opens tax doors. You can deduct a portion of your phone, laptop, and workspace, write off courses or certifications that improve your skills, contribute to a solo 401k, for up to 20% of net income. Use Section 179 to deduct equipment purchases immediately, like a camera or computer, for content creation. For creators and consultants, tools like QuickBooks or Wave automatically track income and generate estimated quarterly taxes. Paying quarterly prevents penalties and smooths cash flow. 7. Urge tax credits. Free money deductions reduce income. Credits reduce tax owed directly dollar for dollar. That's powerful. Key credits for 2025. Earned income tax credit ITC, worth up to $7,430 depending on income and dependents. Child tax credit up to $2,000 per child. American Opportunity Tax credit up to $2,500 per student. Savers credit up to $1,000 too. Married if you contribute to IRA or 401k on modest income. Clean vehicle credit up to $7,500 for buying a qualifying EV. Even if you owe nothing, fundable credits can mean a direct refund check from the IRS. 8. Optimize capital gains. Investors can legally time profits and losses to lower taxes. Short-term gains, assets sold within a year, are taxed at your regular income rate. Long-term gains held over 1 year get reduced rates, 15% or 20%. Wait a few more weeks before selling near the 1-year mark. Use tax loss harvesting. Sell underperforming investments to offset winners. If losses exceed gains, deduct up to $3,000 against other income and carry forward the rest. Brokerages like Fidelity and Schwab provide realized gain or loss reports. Review them each December. 9. Understand the homeowner edge. Owning a home brings several tax-saving tools: mortgage interest deduction, property tax deduction with insult limit, and tax-free profit on sale. If you lived in the home 2 of the past 5 years, you can exclude up to $250,000 in gains. 500. Married. 10. Smart charity. For smart taxes, bunch donations into 1 year to cross the itemizing threshold. Example: donate $5,000 this year and $0 next year. Instead of $2,500 each year, you can claim the large. Use donor-advised funds to donate stock. Instead of cash, you get a full deduction for fair market value and avoid capital gains tax. 11. Education and career deductions. Lifetime learning credit gives 20% of eligible costs, up to $2,000. Employer-provided education up to $5,250 is tax-free. Freelancers can deduct skill-improving courses. 12. The power of timing. Prepay deductible expenses if next year's income will be higher. Defer income if you'll be in a lower bracket. Reverse it if income will drop next year. Timing saves hundreds. 13. Take advantage of inflation adjustments. IRS adjusts limits annually. Increasing 401k by $200 per month adds $2,400 pre-tax, saving up to $600. 14. File strategically. Filing early prevents fraud and speeds refunds. E-file with direct deposit. File an extension if unsure, but pay estimated tax by April 15th to avoid penalties. 15. Professional help vs DIY. Above $100,000 income or owning a business, hire a CPA or EA. They strategize year-round, and their fees are deductible if tied to business. 16. The Real Estate Investor Blueprint. Rental property allows depreciation 27. 5 years for residential. Example: $275,000 27.5 equals $10,000 annual deduction. Combine with mortgage interest, repairs, travel, insurance, and property tax. Section 1031 lets you defer gains by reinvesting within 180 days. 17. Short-term rentals. Rent under 15 days equals tax-free income. 14-day rule. Rent longer, deduct proportionate expenses. Example: rented 60 days. Used 30 personally, 2/3 deductible. 18. LLC and S Corp structure. LLC equals liability protection, same taxes. S Corp saves SE tax by splitting salary or distribution. Example: $100,000 profit, $9,180 tax as S Corp, versus $15,300 sole prop equals $6,000 saved. 19. Home office deduction. Exclusive workspace use, deductive rent, utilities, or use 5 SKU up to $1,500. Store photos and layout as proof. 20. Vehicle and travel mileage rate equals 67 mile. Log with Malik. Airfare lodging. 50% meals deductible for business trips. 21. Advanced SHA tactics. Invest SHA funds for compounding. Pay out of pocket now and reimburse later tax-free, no time limit. After 65. Non-medical withdrawals taxed like IRA. 22. Rental loss rules. Up to $25,000 rental losses offset active income if you actively manage and earn under $150,000 AUG. Otherwise, carry forward or qualify as real estate professional. 750 23. Tax loss harvesting. Automation tools like Betterment auto sell losses to offset gains. Carry unused losses forward indefinitely. 24. Roth strategy. Convert traditional IRA to Roth in low-income years. Pay tax now, withdraw tax-free later. Backdoor Roth for high earners via Form 8606. 25. State-specific credits. Check your state's credits annually. For example, CA Solar Credit, NY Tuition Credit. 26. High-income tools. Use donor-advised funds and charitable remainder trusts for large deductions and estate benefits. 27. Audit protection. Audit rate 05. Keep digital receipts, labeled folders. Taxes 2025 receipts. Charity or business or medical. Organized proof equals easy audit. 28. Family and dependent planning. Hire your teen legally. Pay up to $14,850 tax-free and deduct it. Open Roth IRA for minors or Fund 529 plan. 29. Social Security timing delay SS from 60 to 70 for 76% higher benefits. Withdraw pre-tax accounts early to manage brackets before RUMs at 73. 30. Estate planning. Estate tax exemption equals $13.6 million to 025. Gifts under 18K recipient tax-free. Use gifting plus 529 plans or trusts for education. 31. Crypto reporting. Crypto sales taxable. Use Coinly or CoinTracker. Report staking or airdrops as income. Hold 1 year for lower rates. 32. AI and tax automation tools like Keeper AI, QuickBooks, Tax Advisor, ChatGap Sheets detect deductions automatically. 33. Quarterly tax discipline. 01-000. Pay quarterly. April 15, June 15th, September 15th, January 15th. Save 30% of each invoice. 34. Combining strategies. Stack multiple methods. Max 401k plus. SHA plus Roth equals layered tax-free growth. 35. Tax-efficient mindset. The wealthy plan early, not cheat. Track expenses, invest smart, and treat tax planning as year-round. Every deduction is a government incentive. Use it to keep more of what you earn. If you found this 2025 tax guide useful, share it with a friend who's filing soon. Subscribe for the next episode of US Wealth Series, where we break down high-yield accounts and passive income tools Americans use to grow wealth. Turn on notifications so you never miss a new update, because one smart move could literally be worth thousands next tax season.